Hi, welcome to the Market Alert for Wednesday, the 4th of October 2017. So yesterday the market waiting for the construction PMI figures. When they hit the market, prices moved lower, which you can see here at 9.45. That's the market's reaction. And the reason for this, just a quick look here, the UK construction activity contracts amid uncertainty, and if you just scroll down here, you'll see why this was the headline. The IHS market SIPS Purchasing Managers Index PMI for the sector fell below 48.1, below the 50 mark that separates growth from contraction. So that's why the pound moved to the downside yesterday, and then just found support and then traded sideways for the remainder of the session there. On the daily chart of the pound, well, we continue slightly lower there. You can see prices probably heading towards, I would have thought, this sort of level is where they're going to be. At the moment it looks like we've got a 76% retracement. It might actually just be over. If I can get this just to get to the top of this, from the low of this bar to the high edge just below, so the market could actually come back above the 132. Just watch this area here for any sort of pullback. We don't need this anymore. All this, let's just tidy things up a bit, make the chart cleaner. News-wise today, well, we've got a fair bit today. We've got again the UK. We've got services PMI out at 9:30, and then it's over to the US for the ADP non-farm employment change. That's at 1:15, and then just the two during the markets of crude oil and ISM non-manufacturing PMI, a bit early yet. And then look what we've got today. We've got Super Mario out, and Yellen is also speaking, but that's at 8:15 for Yellen, 6:15 for Draghi. In the Dow for yesterday, we just had the one buy signal. It took a long time for the market to actually move to the upside. Just do this for you, just show you. It took until we got towards the quiet part of the session before the market actually moved higher. The evening, well, same picture really. Market just range bound, and then just before the close, the market spiked higher, and that was on news. Let me just find it for you. Yes, that was on news that Trump says Puerto Rico's debt will have to be wiped out. Now this is very interesting because it's 74 billion. And it's going to be written off. I wonder what they're going to do with the 265 trillion of global debt. If they're going to do the same thing with that so they can have a clean sheet. I very much doubt it. But this is what I found quite refreshing, actually. It says they owe a lot of money to your friends on Wall Street, and we're going to have to wipe that out. You're going to say goodbye to that. I don't know if it's Goldman Sachs, but whoever it is, you can wave goodbye to that, Trump said on Tuesday in an interview with Fox News, according to a Reuters report. So it'll be interesting to see how that one pans out. But that was the reason for the spike in the latter part of the session there. In the daily chart, well, we've got another update, but again, those that eagle-eyed amongst you, you can see that the volume is dropping off. The market's going up on fresh air. It's just being marked up. We know the drill. I thought we've had more consolidation yesterday, but we had the market moving higher. Looks like we've got a bit of consolidation on the overnight market there as prices are sideways to lower. We've also got, as you can see from here, a new all-time high, and we're still heading towards that 23,000. It's just staggering. This is that it's 22,674 there. Right, so have a quick look at the implied volatility before concluding today's market alert. And on the implied volatility front, small tick up from the 7.40 to 7.43 for yesterday, which is a bit odd really, given that the market went up. So I think maybe the option sellers are getting slightly worried that this thing's going up parabolically and on low volume. And we're in October, which is notorious for market corrections and crashes, of course, all the way back to the granddad of them all in the 1929 and the 1987, of course, the major crash of modern times. Right, that will do it for this one. I'll report if there's anything to report about. Other than that, as ever, thanks for watching. See you in the next one.